Welcome to another episode of Borak Bursa, where we talk about anything financial related to Malaysians' financial well-being. Today we have Chuck here, who is representing the average guy, asking very average questions. And we have a very special guest, an expert, Dr. Ye Kim Ling. Right, so he's got welcome to the show. This is his first podcast, and also the first time he's going to be on TikTok. So it's always a first. So a quick introduction, Dr. Ye. He is currently a economist professor at Sunway University. He's also on an advisory committee to our PMX on anything economics related. He was previously an independent board member of Bank Negara's monetary policy.
For 2.5 terms.
For 2.5 terms, yeah. Right? And he was also a former chief economist at RAM, former senior analyst at Institute of Strategic and International Studies in Malaysia, and also currently the deputy president of MEA, Malaysia's Economic Association. So in short, very well established, very smart guy that we have here, who's and also very humble and friendly, to share with us, his views on the economy.
Okay, so for those who don't know, Dr. Ye is one of Malaysia's most respected commenters on the economy. If you Google his name, I'm sure you'll see a lot of things that he said over the years, because his opinion is respected. Regardless of the governments in power, he's always been one of the people that have been looked to for a direction for our economy, right? So we're very grateful to have you on our show. We actually wanted to ask you a little bit more about how you came into this line of work.
Okay.
Specifically.
Thank you. Thank you, Alvin and Chuck. It's really a wonderful opportunity to be here, to join the podcast, and especially in explaining as well as sharing the views on what's the current happenings in the world, as well as particularly in Malaysia. As an economist, of course, in order to have what they call authoritative view or develop an expertise in economics, it's a fairly long journey, given that I've been
you mean
economist since
longer than your CV here?
Yes. Yes. It's almost 30 years.
Wow.
30 years journey, and of course, as every economics lecturer would tell their students, you only learn economics. You may be taught for 7 years, but you need at least 3 or 4 times that in order to fully understand.
Like a lifetime.
How about a lifetime to understand how the economy works and how you can relate better to understanding the world, basically the overall economy. And then very important, I think most of us should view economics as part of our life,
yes.
Our daily life.
Absolutely.
Given that every decision that we make is basically can be viewed as an economic decision. You are actually applying economic theories and concepts when you make a decision. So from that perspective, I think every one of us is an economist. Now the question now is, of course, if you want to be a recognized economist, then of course you have to go to school and get a degree,
in economics.
Higher degree in economics. But nevertheless, that's one route only. But as you know, some of the best economists, they don't come originally from the economics field.
Oh, okay.
Their backgrounds are in engineering, social science, political science. So it's a very interesting field in that your background can be in a diverse field, but depending on the area of your interest, you can actually break new grounds, because we are trying to understand a very important aspect of human behavior.
Yeah.
Human behavior, as well as the behavior of markets, behavior of the economy, and all that. So it makes a fascinating field of study. It takes a whole life, and that also is not complete, given that the various fields of economics are now advancing so rapidly. That's not to deter people from taking up economics, because it's part of our daily life and our how we see the world, how it will evolve as we get more information, we get better understanding. And then importantly, for those who have a deep interest, they can actually look at things and maybe find new ways of understanding how markets behave, how people behave, and all that. And it's through that understanding that we can apply and also, of course, share with the people as to how they can better prepare for any eventualities, especially given the fact that now there are so many different types of shocks that we face, ranging from climate, geopolitics to socio-economic and political shocks that hit us all the time. So we need to develop a kind of shield, the shield of knowledge, knowledge to shield ourselves from all these shocks.
Is it like developing it to the point where it almost becomes instinctual?
It will be instinctual, but at the same time there will still be what they call a dimension that is so-called
learned and analyzed.
It's something that no one can completely master it, in the sense that you will not have a complete knowledge.
Right. It's like the force, lah.
Yes, because in economics there's a area that we incomplete markets, incomplete information, and also incomplete so-called this knowledge. You see. So it is this incompleteness that makes the field, the subject of economics, so interesting, in that we are always discovering new things. And then importantly, for every day, for the layperson, is actually how we interpret some of the events that are happening around us, and then applying what we have learned, what we know, what we experience, and then to better prepare ourselves to basically to insulate ourselves against all these financial, social, or even economic shocks.
But speaking of some of these events, what kind of events in your personal life led you to the journey that you are on right now?
Okay, what's interesting about economics here is that we are looking at how, from time immemorial, of course, every country or every so-called economist or policy maker, they try to understand how countries become rich, you see. So you are looking at progress in terms of economic progress. That means raising standards of living, raising income. And then from there, we develop what we call theories around it, how the society operates itself, maintains itself. And then, of course, importantly, they advance and prosper through technological advancement, through better understanding of the socio-economic and cultural processes of progress. You see. All these have to be evolved together, and then building institutions. Because we are, if you look at human society, we are functioning because everyone becomes a specialist in the particular area of their interest. You see. So, like you are expert in podcasts, expert in so-called, I would say, financial mathematics.
Oh, financial mathematics. That's a good point.
So each one of us has to specialize. We see that society, the world today is driven a lot by specialization, division of labor and all that, to the extent that now, very important, we need to understand the interdependency of each other, both from an international perspective, across countries, across markets, and across different sectors of the economy. That interdependence is the one that makes us allow mankind to actually progress to where we are now today, that planet Earth can sustain around 7 billion people.
Not for long, lah.
Hopefully. Hopefully we will have, everyone can contribute towards the United Nations Sustainable Development Goals to ensure that we have sustainable development, in ensuring that we have economic prosperity, at the same time social stability, and then importantly environmental safety and what's called freedom from what I call ability to shield ourselves from climate risk. Climate risk that includes extreme weather, changing patterns that will affect our food supply, our supply chains, and importantly, how the overall economy you'll be impacted
We have to
by
wait
natural
to-
disasters and all that.
Yeah, I'll have to wait to see how the US elections pan out, really.
Yes, that is geopolitics. And importantly, over the last 5 or 10 years, it used to be environment risk top the list of what you call risks, threats in the world. See?
Yeah.
Now geopolitics has now emerged as the top concerns among all the corporate leaders in the world. See? And that's true for all countries.
I think we'll be getting into the US one a bit later. The first one, let's start with some good news first. So it's been a long time. I think in Malaysia, we're so used to seeing bad news about our economy that for once, suddenly JP Morgan has decided to shine its... sorry, wrong slide.
Start again.
No, mind. We can talk about this first. Actually, don't need already, since you already gone through his story already. We go straight to the next one. Okay, sorry, this is the correct slide.
Yeah.
So JP Morgan has decided to shine its light down on us and say they are bullish about Malaysia, and they've improved our ranking from neutral to underweight. Underweight specifically means, if I'm to understand correctly, is what Alvin's been banging drums about for the last 6 months, saying that the Malaysian economy actually has great fundamentals, but has been undervalued for many years because of various factors, including political instability and so on and so forth. So,
No, I think underweight means that in your portfolio, like put less, but now they move to neutral, then it can be overweight. So that means, so you upgraded us from underweight to neutral.
To neutral from underweight. Okay. Sorry, not undervalued. Okay.
Underweight, yeah.
Underweight.
So underweight in terms of...
Sorry, I've never been underweight my entire life, so I'm not really familiar with the term Yes, good correction. So, Dr. Ye, maybe I can ask you first. Do you think it's about time? Were you waiting for this announcement?
I think if you look at Malaysia's growth prospects, you find that Malaysia has been underperforming for a very long time. You see.
That's the term that you used, underperforming.
So this underperformance is partly due to the fact that we have so much resources, both natural as well as importantly human resources, our human capital. See. Now, if you look at Malaysia's ability to grow, our potential growth rate is easily 4 to 5%, but that can be further enhanced if we increase investor confidence, and because of the fact that we have adequate savings, both corporate as well as individual savings, if we can translate these savings into productive investment, then we will be able to sustain a higher level of growth. You see. So Malaysia has been underperforming largely because of underinvestment, and then also we have not fully utilize our full potential, our resources, both in terms of human capital, in terms of natural resources, and then in terms of the capital investment in our infrastructure. So all these have now come into a point, a convergence of these so-called favorable conditions. Like in terms of this semiconductor industry, Malaysia has built up its own long manufacturing base in the early days. It started off with assembly and all that, and then now we are moving to higher end types of chips manufacturing and all that. So we are now well positioned to actually to unleash the fact that Malaysia now is in a way profiting from the what they call both deleveraging as well as importantly the shift from the US-China trade tension, whereby a lot of multinationals are now trying to diversify their risk away from the so-called geopolitical risk between China and US. So that the spillovers, Malaysia is able to capture some of it, not all, but importantly the ones that fits Malaysia's investment climate are the ones that we are able to secure. So we are seeing a large so-called expansion by existing multinationals as well as new investors coming into Malaysia, located but largely in the Penang. But we know that Johor is also expanding its ability to attract all these new investors.
Wow, you are going like many topics that I had already in my slides already. You're studying the future already. But just rewind back a bit. For people that generally don't understand complicated terms, myself included. Deleveraging? Sorry, I didn't get that one.
The leveraging, of course, there are a few aspects. One is, of course, you will try to reduce your debt level. That's
Okay.
deleverage. That means you're shifting more to equity investment rather than investment based on debt, you see.
Okay,
So
okay.
deleveraging. The other one is, of course, the deleveraging from, let's say, over-dependence on China. Yeah, they have been leveraging on China's low cost and huge labor force availability, and also the skills, skill sets, as well as the supply chain, see, in China.
So when you say Malaysia is deleveraging, what you mean
it's
is
actually multinational are deleveraging, reducing their dependence on the operations in China and moving away from China, so that they spread their risk to other countries.
Okay, got it.
So the other term is actually friendshoring. That means you locate your operations in more friendly countries to escape potential conflict in your current location of production. And the other, of course, the reshoring, offshoring, and all that are part of the terms that we are seeing now, whereby basically it's actually a reconfiguration of the supply chain of multinationals to de-risk. De-risk means lower the risk.
Right. How is that supply chain being altered right now? So, for instance, right now it's direct, let's say, from China to somewhere else.
So it's quite evident since the pandemic that there are over-dependence on China or any particular country, whereby because of pandemic, the borders were closed. So once the borders were closed, all your supply chain will get shut off, you see. So as a result, now multinationals now are thinking of how in the future event, if there's another closure of borders, especially for countries that are either hit by natural disaster or they encounter another pandemic within the country, not elsewhere, or they suffer from a major catastrophe from a climate disaster. So we want to be able to ensure that our supply chain is not affected, or even if it's affected, it's not completely affected. So we need to the key here is to strengthen the supply chain from this kind of potential disruptions.
So that is the reason why, for example, we're seeing more semiconductor investments in Malaysia outside of places like China and Taiwan, so that if anything happens there, they still have Malaysia as a backup.
It's basically this traditional strategy of portfolio diversification. So it's in terms of manufacturing production. Your production bases, you spread them across different locations.
And I think also because for us to be in this position today, we must have done something 30 years ago. So you can't just move. For one, you can't just move for a single factory here. Because there are so many codependencies, right, in part of the supply chain. And I think Malaysia, since the 80s or 70s where we started, I'll say electronics manufacturing. I won't say semiconductor yet, right? But we've built up that skill level as well. Industries around that, like packaging, logistics. It's not just about the product, right? There's so many other things.
Mahathir era.
I would say that, for sure. And we've continued to develop that, right? And we should be very proud of. We have some good Malaysian-made companies that actually do supply to guys like Nvidia and things like that, right? And that was not possible if we didn't start 30 years ago. And so that so we already had that base, and I think it made sense for these multinationals, like what Dr. Ye is saying, to rebase and put them here, right?
Okay, so I have a question for two of you. Both of you agree that the Malaysian economy has been undervalued for quite some time now. Okay, so don't answer yet. I want you guys both to answer at the same time. How many years, do you think has been undervalued? Since what year lah? Since what year? Just put a year out, 2008, 2007, whatever it is, 1, 2, go.
1998.
I said 2016.
That's a very different opinion. It's like, wow, Dr. Ye, you think we've been undervalued since 1998?
That's because I'm older.
1998, he was still going clubbing or
I was still in college, I think.
So
I was still in college.
my memory got burned up to the Asian financial crisis.
Right. So you feel like since 1997 economic crisis, we have been undervalued since then.
Yeah.
So that means the reasons
in a
would
way,
differ slightly from Alvin.
Yes,
Because I remember that Alvin told me, correct me if I'm wrong, in the previous podcast, you told me that the reason why we were undervalued was because of political instability, one of the main reasons.
Well, yeah, what's one of the reasons.
Yeah.
Since 2016, just we've had such a weird
Yeah,
setup.
yeah,
50
yeah,
years,
yeah,
same
yeah.
government, and then suddenly change, and then what?
Yep,
and
yep,
then you
yep,
had five
yep.
prime ministers in the last 7 years, right?
Yeah. It's from monogamy to a polygamy kind of thing.
Correct. So foreign investors, is like, we don't care who you pick as prime minister, but
Just
we
stick to some team.
We just need some stable policies, right? You just can't keep changing stuff. So
Yeah.
I think that kind of scared investor confidence.
Right.
Yeah.
So that's your reason. Then what is your reason that we've been
Okay,
undervalued for the last 1998
during the
26 years?
during the roaring 90s, we had investment growth averaging double digits.
Yeah.
And then the level of investment is average about 35 to almost 40% of GDP.
Right.
So it's a very high level of investment that stimulated the economy. That means our economy was growing at that roaring speed, 8, 9%, 10% certain years in the 90s.
Yeah.
So since the Asian financial crisis, the investment rate, the decade after that collapse during the Asian financial crisis, the investment level was around 10 to 12%.
Okay.
For more than a decade, you see.
Yeah.
It's only the last decade that it rose to maybe about 15 to 16%, and that in more recent years, now it's up to 16 to 17%. This is private investment.
Yep.
If you include government investment, then it's about 22% like that. So we are actually under-investing for a long period of time, and now we are seeing a steady rise over the last few years, you see. And that's why we are hopeful that the investment level now has picked up to a level that will enhance Malaysia's potential growth. Because potential growth is you need to expand your production capacity, you need to increase your investment level, and then of course very importantly, when you have investment, there will be what they call these inter-industry linkages.
Yep.
That's what Alvin mentioned about the supply chain. The supply chain will also have to come in together. See, when you have your main industry
Yep.
being developed, you see.
Yep.
So you have a real so-called pooling power of investment.
So you
that
feel
means
like for
have
the
an
first
engine.
time in 26 years, everything is coming together at the same time.
Yes, in a way that we have a diversified economy.
Yeah.
First, of course, our oil and gas sector, our traditional sectors are still humming well.
Yep.
Oil and gas, our green gold,
Yep.
palm oil,
Yep.
and then of course the other major crops are still going. And then on the services sector, we are very positive about the fact that Malaysia now is on the cusp of what they call digital trajectory, where we are shifting towards the digital economy, whereby we are harnessing the forces of digitalization and all the Industry 4.0 type of technology. You see.
Yeah.
So we need to catalyze that kind of investment,
Yeah.
and that provides a lot of opportunities for Malaysians, especially the skilled Malaysians who have a deep interest in these fields, these new and more exciting fields of so-called technology. So to be successful, Malaysia has to continue to drive forward our technological.
Across all these various
yes,
vertices.
apply technology.
Yeah.
We have to apply our technology across all sectors of economy, including like financial services. We have fintech and all that.
Okay,
so we
so-
are very, very excited about.
On that topic of all these things going at once, right? The next slide, basically, it's not just JP Morgan. So foreign investors are coming in back again, as you mentioned, right? The ringgit is coming back up. And what's the third one? Oh, Malaysia is now projected to be 16th out of the 30th world largest economies by 2075.
Yeah.
I mean, I've not heard this much good news about Malaysia since
But it
Since
says
I was in high school,
It says finance website, so So you can be finance.com, right?
But it's from Star, so must be credible, right? So okay, no, I'm just curious as to like, all these things, are they how much are they linked together?
They are very much interlinked in the sense that we are seeing growth opportunities being realized.
Okay.
In both investment and then also importantly, all sectors of the economy are enjoying what they call more robust so-called development in the sense of either in terms sense of business opportunities, and then importantly, there's rising income and of course very important employment. You see, the big challenge for us is to how to accelerate the pace of upgrading, ensuring that our so-called skilled workforce are able to find full employment. That's very important.
Right.
And then at the lower level, the semi-skilled and the low-skilled, they are paid sufficiently well to have a decent quality of life, you see.
So just make sure everyone's happy. Yeah.
Make sure everyone is able to actually benefit from the economic progress and prosperity.
Growth,
So I think the for Malaysian ringgit, that's quite inevitable in the sense that it has been undervalued. I think since 1998.
2016, right?
Because at that time, the ringgit was pegged 3.5, and then after that, it strengthened a bit, but it depreciated after that.
I think if we want to talk to you about PEG, we're going to have like a 2-hour show.
Yes. Yes. But what's important here is that we already foresee since the beginning of the year that the ringgit will strengthen along the pickup in the pace of the economy. It's already expected. So I think most economists are already expecting that.
Again, a slight divergence, because I think 3 podcast episodes ago, there was this very interesting bit from Alvin that said that good economy doesn't always equal good currency. Remember you said that about using China as an example.
Oh well, because they manage their exchange rate.
Right. So do you think that our currency is related to our economy? I mean,
Okay.
Like seeing now so the good news is coming out, and then the ringgit magically strengthens.
So with regards to that, it depends, because China controls their exchange rates quite tight, and then they have quite tight capital controls. So that's how they manage it.
And like Singapore does as well.
Singapore for sure, they manage it through. Is it a basket of currencies? No, they have. They don't use interest rates. I understand. They manage they manage it through exchange rates. Correct.
And then Malaysia doesn't at all.
Oh, could ask.
Malaysia, we use interest rate.
Okay.
Interest rate to manage our monetary policy.
Right.
It means to ensure that the financial and economic conditions are in line with what we are aiming at in terms of growth and inflation.
Inflation, controlling inflation. Correct.
A nice balance.
So, let's say something like this, where Malaysian ringgit climbs higher since January. Is this market forces, or is this fiscal and monetary policy at play here?
It is reflective of the fiscal and monetary policy, and at the same time, it also reflect the expectations of market players.
Okay.
I think importantly, we also need to keep in mind that prices or values is both driven by underlying fundamentals, economic fundamentals, and at the same time, people's hopes and aspirations, what they call expectations. So expectations may differ, but right now, of course, after a period of so-called downside risk and underwhelming expectations, now we are seeing a reversal. Partly, I think it is also due to external factors like the expected cut in interest rate that the U.S. Fed will likely institute this September. So those kind of expectations are also part of the factor why ringgit, together with other emerging countries' currency, are appreciating.
Right.
And these are global factors.
So as usual, this one, when it says ringgit climbs, is always in relation to the
positive.
USD.
So actually you can say USD weakened also, right? Against the ringgit, because I think this also happened to not just us, multiple currencies also strengthened against the US dollar because of the expectation that interest rates will come down. Yeah.
So it's just coincidental good news for this.
Yeah, I
this
think
particular
the
one.
thing
I mean,
about
it's a combination of factors.
Yeah.
It's like, you know.
the thing about exchange rate is that it cuts both ways.
Yeah.
Exporters will, of course, maybe shed a few tears because
Yeah.
they'll get less export earnings in ringgit terms.
Yeah.
Yes, yeah.
But importers will actually will be happier given that their imports will be cheaper. See? So in the case of Malaysia, if a ringgit should actually reflect its underlying potential, especially now that it's undervalued. We should move to a stronger currency, and importantly, market players as well as investors need to be ready for a gradual pickup in the strength of the dollar and prepare for it, and not be caught unaware that how come the ringgit strengthened and you are caught unhedged or you are not able to export more of
to
your
take advantage
export.
of the
Yes, so the expectation, I think, important for businesses as well as importers and exporters to actually factor that in their planning, you see, so that they can manage their risk better.
What would you say? I mean, what would you say is a reasonable exchange rate, assuming US goes back to 2.5%, and you still continue printing money like crazy?
Wait, let's do this again together. Okay? Because I know your answer roughly, right? Because you told me over the years already.
Yeah,
Okay,
I don't
so
remember, I don't
right now
remember.
it's 4.6 something, right? 4.6. What do you think should be the equilibrium value for the USD to MYR on the count of 3? 1, 2, 3.
4.2.
$4.
4.3, is it?
Two, I said
4.2 and 4.
$4, I think.
4.
$4, yeah.
Okay, quite close.
I'd
Quite close. So
Yeah.
we're halfway there.
There are actually many factors determining currency, but what's important here is that Malaysia actually needs a stronger currency to propel its so-called high growth strategy.
Yeah. We don't want to be a sweatshop.
Yeah,
Yeah.
correct.
Yeah.
Yeah.
So basically, it's willing buyer, willing seller, right? So right now you're saying that we're going out there with a cheaper cheeseburger, and then we can actually charge a little bit more,
But
yeah,
we
knowing
also,
what we're worth.
We also have to be mindful that the foreign exchange market
Yeah.
is subject to volatility that could be due to non-related factors,
Right.
non-fundamental factors, like for example sentiments, or even herd behavior.
Yeah.
All this kind of so-called irrational behavior. That's something that
That's something we always contend with.
Yes,
Irrational
behavior. And also sometimes it's due to thin markets. When the market is too thin, thin markets means there are hardly any trade. So the prices do not reflect
The true value.
the true value, the fair value.
I don't explain this. Can you?
So thin markets is like low trades, low volume of trades, to the extent that it's not efficient and you do not, it may not reflect the overall average market.
You're talking about
price.
equity trading,
Both equity trading or exchange rate trading.
Low liquidity.
Low liquidity.
When it's
So
low
is Malaysia
liquidity.
considered a low liquidity market or not?
Stocks?
Like,
I think certain stocks are quite low liquid in
We
Malaysia.
look at it from a bid-ask price spread. If the spread is very high, then it's a thin market. The other one is the liquidity risk premium, how much you attach a liquidity risk
Right.
premium to it.
does it also matter how much of the market is by retail investors and how much of it is by institutional
talking
investors?
about forex
The thickness, this thinness thing. Because with,
What asset class are we talking about?
let's say, equities.
Yeah, it will be a combination of both.
Okay.
Typically, when the market shoots up, as I observe in the Malaysian equity market, is foreign funds coming in
Right.
Yeah.
to keep it
Right.
afloat.
Right.
To push
Nothing to
it.
do. It means less to do with local trades, lah.
Well, especially in the spikes.
Interesting.
In the spikes.
Yeah,
Spikes are
because
always caused by foreign inflows and outflows.
You get inflows and outflows, and because when it's so thinly traded, you don't have enough sellers, I say at a low price.
Yeah.
Then but you got more buyers. Maybe just you don't have to be a lot.
Correct.
Maybe 3 or 4 million. Suddenly you can 30%, 40% of the price, right?
Yeah.
So quite common in Malaysia because we have 1,000 companies, and I think analysts probably cover at most 200 companies. So 800 are left unknown.
Yeah.
And that's what we specialize in, right? We try to look for stocks that are
At least the
undervalued.
800 in my portfolio right now with you guys.
well, that's how you find alpha, right? Because in liquid markets, you can, if your fund is not too sizable,
Right.
you can take advantage of some of these inefficiencies
Okay, so this topic, I think we were discussing it a little bit off air. Account tree, right? So we talked about it in our last podcast as well. So for those who don't know, basically EPF started an account tree, which basically has the option to withdraw the entirety of this, 15% of your 10% of your total EPF at any point in time. And the result is 7.81 billion ringgit outflow from EPF just from this change. Was this what was meant to happen? What was the goal here, opening up a country?
I think if we look at the reasoning, we find that the Malaysian households, especially the lower income groups, they have been disproportionately affected by the pandemic, either in terms of losses of jobs and income, or in terms of slower recovery when the pandemic was over. So because of these factors, the unequal, disproportionate impact on the lower income groups, you find that they are much worse off, and they face financial distress much more than the middle and upper income groups. So, and then unfortunately, which is what which I think economists don't agree in terms of withdrawals. We had 4 withdrawals during the pandemic, and that has depleted a lot of savings, retirement savings. So it's not healthy. If something is not healthy, not right, and now that, of course, a country is meant to be a compromise between those who say that it's my money, I can do what I want, and I will take the risk in terms of in the future if I don't have enough retirement saving, I own it up. I take the responsibility. But typically that's when they have not faced the situation yet, because ultimately the government will have to come in. So from that perspective, you'll find that the account tree, it's important that those that withdraw account tree, they're actually making good use of the money and not spend on consumption. If it's spent on upscaling, spend on entrepreneurship opportunities or business opportunities that can enhance their long-term well-being and income, then it is a good. So the onus now is on the
individual
contributors that withdrew the money and make use of that money. You see? So by right, they should be made to sign a so-called waiver that in the future they won't depend on government assistance.
I will not buy the latest iPhone.
So if they can make productive use of it, especially for those that for example, in terms of opportunity cost, if you do a cost-benefit analysis, if they withdraw the money and they use to pay for, let's say, debt that have higher interest, or some debts that are provided by these money lenders or alongs and all that, then of course it's good use that you do not get into deeper financial distress. That's one
that's winning the battle and losing the war, really.
Yes, that's a good analogy. But I think this is, in a way, we can see it as
an IOU.
Is a policy that is, although they are welcomed by the individual, those who are withdrawing it, they need to actually. Very important.
Learn fiscal responsibility.
Find a way that they can replenish their savings once they have withdrawn that. You see, if they don't replenish their savings, it is unlikely that they will have sufficient income when they retire. See. That's the risk. That's a worry, the concern that this account tree will create. You see, create a more.
I feel like KWSP. I don't know, because I didn't withdraw my account tree. I left it in there. Even though Alvin's advice was to actually withdraw.
No, because
anyway,
if you knew how to grow it better than 5%, right? So why would you leave it in there?
Okay, no. So I did withdraw my account tree, but I'm actually curious as to whether, when you withdraw, does KWSP have a poll? Because I think that would be incredibly useful, right? To ask you what you're going to spend it on. At least make people think about it, right? And then also you get the data, right? Like, are you going to spend it on a new phone? Are you going to repay
I
a
don't remember them
debt?
asking. I don't think so. I don't think so.
But they should have asked. I mean, KWSP, EPF, you guys are watching, please, think about next time you want to release a country, at least ask people why they're withdrawing.
Account for.
Account 4. Yeah, account 3, nothing left already. Yeah. Okay, let's take a quick break and then we'll come back with a few other topics.
Cool.
All right?
Alright.
Yeah. Yes, this topic just happened a few days ago as of the recording of this podcast. Trump was shot at, right? And they hit his ear. I imagine he doesn't have very big ears since he's not a very good listener. But okay, so why is this on Borak Bursa, right? Because when something like this happens, things in the stock market also happen, right? So we found this article basically saying that global markets are ramping up to Trump trade, okay? Meaning that all the companies that people think are going to benefit from his policy making, say oil and gas, are going to benefit, and those have knock-on effects back to us here in Malaysia. Maybe you guys can just talk about what kind of effects that you think are going to happen if Trump wins the election in November.
So I think internally we've been discussing it even before the shooting.
Yeah.
That Sleepy Joe wins or Trump wins, right? What happens? So what we do know about Trump is that he is a businessman.
Yeah.
So therefore he is very business friendly with a lot of his policies. We also know he's a big oil and gas Texan guy. Most likely, we are expecting maybe softer oil prices, crude oil prices at least, if he's trying to, because I think the US today, where they signed the petrodollar 50 years ago is a very different place, right? Saudi was the largest exporter of oil, but 50 years tech has changed, right? So you can now extract shale oil very cheaply, right? As low as $5 per barrel, right?
Yeah.
So, we know he's a big oil and gas guy. So, likely there could be a lower crude oil price. Likely that's what we are projecting. But again, we're not sure.
Not in Malaysia, because we're removing the subsidy anyway, right? So.
Well, I mean it's global oil prices, right?
Yeah.
So it's global oil prices. So which means that you're investing in oil and gas companies, we might see some softness possibly. So we have to kind of look at and maybe mitigate some of that risk, because what happens there may have a spillover effect here because it's a global oil thing, right? So, and also I think that's the fastest way for them to reduce their, because a lot of the Federal Reserve is very obsessed with interest rates or inflation rate, trying to bring it down, right? And if you look at the basket of what forms your inflation rate, the number that they so badly want, which is 2.5%, I believe 30-40% is energy bills, right? So if you can bring that down, you hit your target pretty quickly.
Right. So oil and gas mainly. Dr. Ye, what do you think?
I would share my view from a geopolitical perspective.
Sure.
Given that we are now in a transition from a unipolar world to a multipolar world. Now, that transition could be very disruptive or it could be smooth. So if it's smooth, then of course the world can live in peace and importantly allow markets and economies to thrive, you see. But it could also be highly disruptive. And most observers and analysts would think that both Trump and Biden, they are two sides of the same coin.
They're both disruptive.
They will defend U.S. hegemony. That
Yeah.
means they want to preserve the unipolarity. So that means hot conflicts, you see, will happen.
Yeah.
That is the scary part.
Yeah.
So we are hopeful that perhaps after the bullet that went through his ear, he could listen more clearly and perhaps join the forces for peace. I think that is a very important aspect of the current world, the world today, you see. And from a financial market perspective, the concern is over the pace of de-dollarization, how the pace of it, and then importantly, if there is an alternative, then we could see some turmoil in the financial markets that will happen, largely because of the fact that the U.S. is raking up debts and high level of deficits and government borrowings to the extent that it's not sustainable.
Right.
So when you create fiat money in that kind of volume and speed, it creates fear among investors that U.S. dollar is now being debased, you see. So the question now is whether the markets, when, it's not a question of whether, but it's when.
When what, sorry?
When the U.S. currency or U.S. markets will undergo
Downturn.
a sharp downturn, you see.
A sharp downturn.
Yes. So we have to be mindful that there are still two ongoing conflicts.
Yeah.
Russia, Ukraine, and Gaza.
Yeah.
They are still not over. So the potential for escalation is always there. The risk is very high, especially in the Russia-Ukraine conflict, you see. So one positive news, potential positive development could be that Trump would, he has already said that he would end the Russia-Ukraine war when he comes to office, you see. So that could be something positive if he follows through his promise.
By giving Putin Ukraine?
In a way, part of it.
Peace deal. Peace agreement.
Peace deal. Okay,
So
okay.
and that will be very positive for the financial markets. Once you have a peace deal, I think the financial markets will likely take a ride up.
So in a strange way, you're saying that Trump might actually be a stabilizing force in the world.
Yes, especially in view of the ongoing conflicts in Russia-Ukraine war and Gaza conflict, you see. And of course, he's...
Huh?
I think
so you think Trump is going to be stabilizing?
I think with his close ties to Putin, I think the moment he becomes president, I think that within next week, I think it's settled later. Yeah, I agree, I absolutely agree. Yeah.
Okay.
So if that pans out, I think the world will be a happier place.
Yeah, because if you think about it, the only thing that's backing Zelensky right now is the US.
Yeah.
So you pull that rug out on them, they have to come to the table to talk. They have to.
I mean NATO lah, but yeah lah.
Well, like UN is
Yeah,
UN,
yeah,
right?
yeah.
It's US, right?
Yeah.
Yeah. So yeah, I mean, the person backing you say, you know what, you're gonna come to the table talk. I think they don't have much of a choice.
Yeah.
Of course, the other side of the end is, of course, he could ratchet up pressure on China.
Yeah.
So that could offset the short-term so-called relief from war, but we may see
So peace somewhere else and then economic war somewhere else. So.
I think the China thing is given for sure. Really.
Yeah.
Like,
Okay.
regardless which president comes in, I think
Right.
the China pressure is there.
Yeah.
Right. Okay. Cool. So would that mean that like investors should have some hesitation about Malaysian companies that deal a lot with China? Or
No, in fact, Chinese companies that are coming to Malaysia,
yeah.
as well as Malaysian companies that are in China, they're actually diversifying the risk from US-China trade
you
wars.
mentioned this earlier. Yeah.
So, in a way, they are already taking measures
Right.
to reduce the risk of decoupling, you see.
Yeah.
So I think, either way, Malaysia will continue to benefit from increased investments from China, and also, of course, the entire reconfiguration of the supply chain.
Yeah.
That Malaysia, if it's able to attract some of it, and that will benefit especially our SMEs and those that are able in a position to capitalize on the opportunities.
Are there maybe any companies that, I mean, at least that you're aware of, that had their supply chain or their costs go up significantly because of the war in Ukraine, that might recover from this, once Trump comes into power?
I think personally, no, I don't have. I guess there's probably one listed company that dealt a lot with Russia that was impacted.
Uh-huh.
Otherwise, most of them are not
Not that affected. lah.
not so affected.
Yeah,
Russia,
that's not what my
Ukraine thing.
contractor tells me, lah, but okay. lah.
Yeah, I mean, of the 1,000 listed companies that I
Yeah.
know of,
Yeah.
I think one in Malaysia that I know of. I think the other one's actually based in Singapore.
Right.
Right.
Okay, no worries. Moving on. Right, so the next topic is quite interesting, something that I think was a surprise to me as well. So there's two things here, and they're both quite related, I think. So one is the Singapore-Malaysia Border Economic Zone, okay? Since this announcement, PMX has also come out and said that Johor will become the most economically developed state in Malaysia. Now, this was a shocker to me because, I always thought that Johor wasn't that high up in the rankings. I always thought, like you, Penang, Selangor, and then maybe some other state. I didn't even know which state, will be third or fourth. But Dr. Ye, you were saying Johor is now already, in terms of GDP?
Second largest in Malaysia.
When did that happen? Do you know?
I think that was some time ago.
Oh, really?
Yes. It has because it's a part of the industrialized West Coast industrial belt. See? So,
Right.
so its contribution has been growing. Partly also because they have the Iskandar Development Corridor.
Yeah.
And they have attracted quite sizable investments there.
You also didn't know about this until recently, right?
Nope, I had no clue. I thought maybe Penang,
Even though you did a video on Johor as well, right?
Yeah, correct.
Yeah.
I didn't know that they were second largest by GDP. I mean, we assume Selangor and KL is as one state lah, Klang
Yeah,
Valley lah.
yeah.
Then Johor. Well, of course, Johor is 4 times smaller than Klang Valley right now, right? Right now, but
Yeah.
maybe that's where the potential is, right?
Okay, so to those that don't understand, what is an economic zone, and how does that impact the state? Yeah.
Okay, when we have an economic zone, that means we have a designated area where policies and strategies, as well as programs and so-called investment activities, are concentrated with what we call preferential treatment. That means more favorable treatment.
Like MSC Super Corridor.
Yes, like MSA Super Corridor.
Right.
And more importantly, I think when you look at that zone, we find that there's a lot of complementarities. That means because of the proximity
Yep.
to Singapore, which is a high income, high wage, high cost, all these factors.
High blood pressure.
And then we have Johor on the other side, just close by. So there will be a lot of spillovers, and which we are seeing now. So I think the key challenge here is to create a conducive investment climate that can attract Singaporean industries and businesses to relocate their high cost operations into Johor and capitalize on the incentives given under the Johor economic zone, you see, special economic zone, and that is the attraction for Singaporean industries to actually relocate some of their, especially those high cost operations to Johor. But at the same time, if they are thinking of expanding, so the natural place to look at is actually Johor, see. So it provide them with an outlet for expansion, and also an outlet for them to reduce their cost of operation, and also tap on Johor's economic growth opportunities. Because each time a major company moves over, its entire supply chain will tend to follow, and then this is where Malaysian companies can benefit and try to leverage on those opportunities.
So, are there any examples that you guys know of the policies within this economic zone that create this kind of dynamic?
I don't think it's out yet.
Yes, it's not out yet.
But I mean, like suggested or theorized.
They've been quite tight-lipped, to be honest. I don't know.
Like for instance, looser immigration policies.
Oh, I think that's for sure. I think that's if you want that trade to happen, then it'll be a bit more porous borders lah. I think they already started a couple of weeks ago. Where it's Johor and KL, just a QR code and you're in and out.
Then like cheaper electricity, maybe
Lower, yes.
yeah,
I
lower
think
tariffs.
one important aspect that, especially for investors,
Yeah.
because that zone, if investors are coming in, they have the support of both the Singaporean and the Malaysian government.
Yeah.
Government support is very critical, especially in high-risk industries.
Right.
So when they know that both governments are supporting it, they will, all the activities will unlikely to face any hurdles. That
Right.
means they will be fast tracked. And that's a very important consideration for investors. They want their business costs to be low and efficient and free from all the so-called red tape and bureaucracy. You see. That's one aspect. The other aspect is the connectivity. You see. Once the rail transit system is ready,
Yeah.
you will make it even more competitive to actually locate in Singapore, in Johor. See.
Right.
That will be the
And maybe
could
for
be
the
a
job
game
market as
changer.
well,
Yes,
Job market for
job market. Now 400 to 500 Malaysians cross over daily to work in Singapore.
Is that all 500?
I think more than that lah.
Daily, daily
Daily, yeah.
they cross over daily. You see. So it could actually retain some of them here and actually benefit both sides of it.
Yeah. Higher spending power as well,
Yes,
so the commercial industries will come out.
Yes, there will be a lot of spillovers.
I mean, there will be a spillover. It's like a major thing, right?
Yeah.
Right.
So Johor is really poised, as you said, like to be one of the big boom towns.
Well, yeah, I certainly think so. I think it's got a lot of potential because of being so close to Singapore and the fact that I think it never kind of took off maybe 20 years ago, 10 years ago when it was mooted because Singapore didn't really need Malaysia. I think the first signal was, they don't need Malaysia, right? They're fine by themselves. I think if you look at it, kind of the urgency kind of kicked off a little bit more during the pandemic time because, properties have gone through the roof in Singapore.
Yeah.
If you talk about B40 or M40, they are also feeling the pinch because those that are renting, a big part of their disposable income is now gone to rents, right? And there's simply no alternatives, right? And I think that the kind of one catalyst was last year they stopped issuing new licenses for data centers in Singapore. They're like, hey guys, we don't have power, we don't have water for you, right? Because those are very important. And then of course they moved over here. We know that story about data centers. So I think for now, Singapore realized that, we kind of, when you have high rents, you have very unhappy voters. There needs to be something to address that issue. And I think Singapore is a very good alternative. And seeing that,
Johor, you mean?
Johor would be a very good alternative. And if you look at it throughout history, all the richest cities, right, from Babylonian times, right, you can see that they're all coastal cities. Even today, if you look at China, where are all the T1, T2s, right? It's all the coastal cities, not inward, right? Because coastal city tends to do more trade. That's where the ports are. If you look at historically, that's where trade is, that's where wealth is created, right? And literally, Johor is a coastal city. I mean, it's right next to Singapore, right?
But then his hometown, haven't come up yet. Port Dickson, originally.
Seremban.
Oh, but Port Dickson, PMX's hometown, Port Dickson.
Well, we do have a long coast, right? We can also argue East Coast and West Coast as well. But we already know that there's a lot of trade that goes on in Singapore, right? So it's a very high probability that Johor being an extension of that coastal city will definitely get a spillover effect, right?
Fair enough. Okay, I think last few topics here. So this one, we saw a bit of news. Khazanah and EPF are both taking over bits of MAHB. And then after the recent HRDC scandals, there's also calls to privatize HRDC, which is the Human Rights Development Corporation, HRDF.
Human rights, no, human resources.
Human resources. Human rights in Malaysia, please. Anyway, kidding. So I wanted to ask you guys about your thoughts on privatization of GLCs, right? Are you guys in favor of it or not in favor of it? Or does it matter on a case-by-case basis? Like, do you think it makes things more efficient? Like, the image in our head, of the typical person is like, oh, it runs like a company, it'll be profit driven, so obviously it'll be better. But is that necessarily the case when it comes to reality in Malaysia for GLCs?
I think there are certain government functions you can privatize and certain ones that you just can't.
Okay.
If you're going to leave it to the private sector to build pure infrastructure, let's say, LRT or things like that, it will never make sense. Or build water or electricity power poles when you're first starting out. None of the economics will work in a private thing. So I think certain things need to be done by the government.
Actually, in your class, you also you ask people to pick stocks, and then one of the stocks that you ask them to pick, option to pick is TMB, and to see how it develops over the next 10 or 15 years. And TMB's price actually went down, right, in that period.
TMB's price from IPO in 1992 till 2011, 2012 for 20 years actually remained stagnant point to point.
Okay. So is that representative of it not being a good privatization move? Is the stock price an indication?
Is the stock price an indication? I don't think so.
Okay.
Yeah, so I don't think a stock price indication. So if you do look back from 1992 till 2012, which is 20 years, right? I think its profits grew 6 or 7 times, cash flow grew by 10 times. So what I was highlighting was that price does not equal to value all the time. So even though the company grew by measurements of accounting numbers, the price didn't grow. So
you're saying TMB is undervalued?
At that point, it was undervalued.
Now?
Yes. Now I'd rather not comment. I mean, it was $5 today. It's $15.
Okay.
Right?
Let's disassociate from specifics now. But what do you guys think about privatization of?
Okay, now from a theoretical perspective,
Yeah.
it doesn't matter whether you're in the hands of the public or or government or in the hands of the private sector. As long as they are able to leverage on the full potential of the business opportunities. So what it means here is that the management is the key.
Right.
If the management is able to unlock the full value and then continues to sustain it, then it should be in the hands of whichever is managing it. But the problem here is that if it's in the GLC hands, the continuity and the certainty of ensuring that you have the top management that is based on competency, based on excellence and all that may be harder to perpetuate, you see. Whereas in the private sector, if in its private hands, you get to answer fully, you see, for whoever is in charge, you see. So that accountability and transparency and importantly, the competition.
This is in theory, lah.
In theory.
Yeah.
Because it doesn't matter, because if you are in government hands and you have good management,
Yeah.
there's ensuring that there's no government failure or human failure, those prone to corruption and all that, then both can perform equally well. See?
Yeah.
But the chances of GLC versus a privately owned, is better in the hands of the private sector. See?
Right.
If you look at the long history as well as the track records of many companies. See? So there is what's important here is actually governance. See? Governance and the ability to choose the leaders that have the vision, the competency, and the creativity and innovativeness to drive the company to a higher level. Like in this case, Malaysian airports, if they are able to, with a new partner coming in, able to unlock the full value of all the assets, airport assets, then of course, it's time only will tell.
So basically, you're saying that it doesn't matter as long as there is a meritocracy, right?
Okay.
But at least in the Malaysian context, do you guys believe that privatization would allow for a meritocracy to happen? Because in my perception, at least as a normal rakyat, it won't, because even though it's privatized, you're still getting government contracts, you're still getting people appointed to leadership roles, not within the company as like a standard corporate structure, right?
Yeah, I mean, you're right. I mean, Tenaga technically is a privatized.
Yep.
It used to be called LLN, right?
Yep.
Lembaga Electric Nasional,
yep.
right? So it was a government department that became a public company.
Yeah.
But we can't deny the fact that it is still a GLC. It's owned by GLC, and it's protected by government laws, right? It does not really need to compete because in Parliament they've already passed the act that said that only they can supply and distribute electricity. So whether it's private or public, I mean, if you're a monopoly and your business is safeguarded by having no competition,
Yeah.
how efficient? I mean, by definition, if you look at economics, right, monopolies will never be the most efficient, right? There's just because competition drives efficiency and innovation and things like that, right?
Yeah.
So I think it's beyond just being private or public.
Right.
I think it's how it's structured. I mean, how it's structured, right? So if HRDF has 50 competitors, yeah, it will be highly efficient, right? I mean, if Malaysia airports, anyone can really build an airport and build competing airports with them, they'll be more efficient. It's natural market forces, right? It's Adam Smith, the invisible hand, right?
Yeah. But there's some things that you wouldn't want to privatize, obviously, right?
Of course, I think some things like public
EPF?
public healthcare, you don't want to privatize, right?
Would you want EPF to have competitors? I mean, then it'll make it less efficient also, right?
No, yes, I believe EPF should have competition. Yeah. I mean, competition, regardless, I think, of what sector they're in, is market economics, right?
But market economics is corporate greed driven, lah. Like it will be to the benefit of the company, not necessarily to the benefit of the people. Like you said, like public infrastructure is like roads. You wouldn't trust,
Yeah, but I think companies need to drive a profit to be sustainable, right? And that's the I mean, it's invisible hand, right? So unlimited wants and unlimited needs, and
We also have this competition commission to ensure that there's fair competition. There's no abuse of market power and dominant position and all that. So I think very important to, although we have markets that are so-called not subject to full competition, we must have a regulator in place to ensure that all the practices are fair and equitable for the consumers and for the public in general.
So who is the regulator for something like Malaysia airports?
This will be under the Airport Aviation Commission.
MAA, is it MAA? Yeah.
Then the other sectors will be under Malaysian Competition Commission, MyCC.
Okay.
And then of course, financial sector we have Central Bank.
Yeah.
And securities,
Securities
the regulator, right? Securities
Yes.
Commission. Thank you again, everyone, for joining us. I think we learned a lot. Dr. Ye, thank you for spending your time with us.
Thanks, Dr. Ye.
Chuck, for asking
My pleasure.
the average questions. Fantastic.
I also learned a lot.
He's just being humble. I'd like to thank all of you guys for watching. Don't forget to like, subscribe, click that like button if you like what you're seeing, and see you guys at the next episode. Thanks for signing in.
Thanks, guys. Bye.
Bye.